think we should get started. Yeah. Should we? Good. Hello, everyone. Namaskara. Good morning, good afternoon, good evening. We are in a different time zone. So welcome all for this third session of webinar series. We started off with health and wealth. So we did two series of wealth. I think people are more interested in wealth. That's good. And now this time is also the third series with wealth and also generating wealth through investments. So we have our guest today, Ishkaran. He is a close associated of WinNest. WinNest is basically headed by Mr. Sunil Kumar. He had recently visited our Kannada Rajyotsava to meet the people, and he is one of the certified financial planners. He also is there today with his team. I could mention a few of them, which is Uma Devi, closely coordinating with us for this webinar, along with Shankar, Deepika, and Vasu, and Sunil Rohira. And in addition to today's topic, we have a second topic. I would welcome our second guest speaker, which is Isha Kotwal. She's leading international operations for Total Environment Homes, and she has been helping our community to guide on what are the good real estate investments. So along with her, we also have Kadambari, who will be supporting Isha Kotwal. So having said that, I will not take much of the time on this introduction. I would basically set up this session in two halves. The first half is for 60 minutes, which will be mainly driven by Mr. Sunil Kumar, Ishkaran and team on the diversifiable equity assets in debt markets. Yeah, this is an interesting topic. So it is equity and debt. I don't know how exactly. Let us learn from that. And after that, from 12, we will be passing on the session to Ms. Isha Kotwal for explaining us what total environment homes is and how exactly we could leverage these from our investments. Okay, so I request Mr. Sunil Kumar to take over for a few minutes and then start the session. Thank you very much, everyone.
Thank you, Riaz. So in this webinar, I have the privilege of, speaking the mother tongue. So ಎಲ್ಲರಿಗೂ ಮತ್ತೊಮ್ಮೆ ಕನ್ನಡ ರಾಜ್ಯೋತ್ಸವದ ಶುಭಾಶಯಗಳು. And Riaz, thanks for hosting me in Germany. It was really an honor and privilege and pride that we represented, the Frankfurt Rheinland Kannada Sangha, and you gave me an opportunity for the stage for 10 minutes. It was really wonderful to see a mini Bangalore, a mini Karnataka, right? Putta Karnataka there, in Frankfurt. And I could see more than 500 people, 500 footfalls, the kind of floating population I saw. It was really very exciting for me to see, a small portion of Malleshwaram or Rajaji Nagar in Frankfurt. So, yeah. The topic is diversified equity and debt asset class. Let me talk about what's happening in the. I hope I am loud and clear, right, Riaz?
Yeah, your voice is very loud and clear. Yeah.
Thank you so much. Yeah, thank you. So let's talk about what's happening in the Indian scenario. First of all, I would love to say, somebody's.
Please request everyone to go on mute who is not speaking. Yeah, thank you.
Yeah, so there's some exciting news. For cricket fans, we have some good news. Down under, India has gone to play Australia. India were the underdogs, but the result has been fabulous. Nobody expected India will come out with such amazing results with some lot of newcomers without the real captain, Rohit Sharma. So that is how equity also sometimes behaves like this. So unpredictable markets are, the way India performed against Australia and the way India lost against New Zealand also is something which was not expected. And in a hometown, in their own background, with the spin turf, India lost for spin is also unexpected. So, and that is how equities actually behave. Now, to talk about what's happening in the global scenario, right? We know that Trump has won, and now everybody's the countdown has begun in January. He'll be taking the office, but there are a lot of you know. things happening across the world. The Russia and Ukraine has got more hotter, which is not right from a global perspective, but that's how things are. But you never know. Donald Trump can come and has the capability to pause this or halt this or even win a Nobel Prize. You never know, right? Anything can happen. Again, it's unpredictable, and the same thing is happening even in the Israel, Hamas or Israel, Lebanon, Israel, Palestine. So unfortunately, a lot of innocent lives are lost, right? But that's how the game of the world is. So there is always some impact when something like this in the global, geopolitical scenario. That's the reason I'm mentioning all this. We all know that China also, there was some stimulus, or you can call ease of money. So Chinese now are attracting some traction, because they were like almost, gone in certain aspects, but now they are trying to revive the market by infusing some stimulus to the market. And now because of that, we saw a lot of foreign institutional investors walking out of India and choosing other economies. But still, in spite of the last 1 month, probably Indian markets have really crashed to an extent of almost like 7-8%. But last Friday we saw some revive. Almost markets came back 2000. Now probably markets can also come back, but this is an opportunity that markets gave us, that there was 7-8% down for someone to invest in lump sum also. But what happened in the meantime? We all know elections concluded yesterday. Again, in Mumbai, the BJP coalition has come out victorious. And certainly this will also impact to an extent markets in India, because it's the ruling party which has again supported the Maharashtra government. Now that sentiment's also a positive and favoring the ruling government. But in between also there was some Adani shock. We all know that, right? In the US, he was vindicted, right? So there are a lot of things happening. These things keeps happening even. But one thing I would love to say is, India is definitely the brightest star amongst the all economies, because of the consumption, because of the youth, or because of so many positive aspects. I think so. It's India's turn. Probably next 10-15 years, markets might be volatile. Markets may behave in a up and roller coaster manner, but the advantage is definitely on India. And anybody who sets aside money in Indian markets from a long-term perspective are bound to definitely create wealth. So being in the industry for 2 decades now, this is what I foresee. Any portfolio today with WinNest, which is more than like 8-9 years, we don't see a negative returns or a negative ROI in the portfolio. I'm very happy to say this. Our mutual funds, any mutual fund, if you look at beyond 8-9 years, there are no negative returns. Most of the mutual funds have come at somewhere around 8-9% kind of returns. So I think so. It's really an advantage India. In fact, that's one of the reasons why we have an expert from Mumbai, right? Riaz will introduce this gentleman to the entire fraternity here, right? A banker by profession with more than 2 decades of experience and working in the economical hub of India, the financial capital of India, the Mumbai. Mr. Ishkaran is here today. Over to you, Riaz. Right, and for a small introduction, and then we'll put Mr. Ishkaran on the stage. Right. Once again, thanking you, Riaz, for this wonderful opportunity to be amongst the Kannadigas in Rainman Kannada Sangha. It's an honor and privilege. With that, I hand over to you. Thank you so much. ಎಲ್ರಿಗೂ ಮತ್ತೊಮ್ಮೆ ವಂದನೆಗಳು.
Yeah, thank you for giving a context setting, and you have already said elaborately on Ishkaran. I would again request him to take through with his knowledge on these diversifiable assets in debt markets. I think the statement itself is very interesting, equity and debt. So maybe I will request Ishkaran to start right away. I will give you the host access. Yeah. Over to you, Mr. Ishkaran.
Good morning, good afternoon to everyone in different parts of the world. and India. Indeed, it's a pleasure getting into this discussion with all of you today. And I was just listening right now. Sunil said that the Indian markets have crashed. So I just would like to start with this lines: Have Indian markets crashed, or Indian markets have corrected? Or is it a normal phenomena, or is it a phenomena which happens every year? So, just starting on those lines, I will like to show everyone something very interesting. I will like to use a lot of my screen so that it's a more interactive session. People, if they have questions, they can definitely ask me anytime, and I would love to make it a more interactive session. So, I will just like to 1 second share this.
Yeah, we're able to see your screen.
You're all able to see my screen. 1 second, I'll get the. So, just to give you a bit of background for our global friends, Indian markets had hit lifetime high at end of September. If people track the Indian markets, our Nifty index, which is the most followed index, had touched 26,200 level. As of Friday, we were down about closer to 8-9% since the rally. But I just want to show my friends here something very interesting that I'll do a full screen for this. In 44 years since the time we've been tracking the market, every year except 4 years, in those 44 years, every year market has corrected, or there has been a correction by more than 10%. So if you see, those years were 1984. I was just maybe born in that year, that's why market did not crash. On a lighter note, 2014 market did not fall more than 10%. That is when Mr. Modi got selected for the first time. 2017 we had a bull run, and in our recent memory, which was 2023. Except this year, every year the market has, within that growth journey, Nifty, which touched 26,200, has gone through these corrections. Obviously, in 2008 we had the global financial crisis. In 2020 we had COVID. In 2022 we had the Ukraine war. So what it shows is that if the market has to grow, there will be periods or years where you might get a 10% correction, which is considered healthy for the market. But why did the market correct? Let's get to the point. This is just to show you that some of the index have fallen 7 to 10% from the highs in last 30-45 days. Basically, foreign institutional investors, which own almost 18.5% of the Indian markets, started selling in the Indian markets. Just to give my global friends a context, in last 40, 45, 50 days, they've sold $20 billion of Indian assets. Luckily, unlike previous time, our domestic institution and investors like you, investors, retail investors, HNI investors, they have bought. Otherwise, if they would not have bought, this correction might have been a 20-30%, but it was capped to around 8-9%. But as my friend Sunil was saying, that why are the FIIs selling? The first reason was, obviously it started 45-50 days back with China announcing that they will give a two. They initially said that they'll give a $2 trillion stimulus. It turned out to be only a $2 billion. So some money initially moved to China. Then last 45-50 days we've seen a lot of geopolitical issue. It started with the Iran Israel retaliation, uncertainty. Last 5-10 days it's aggravated to the Ukraine Russia issue. So again it causes a lot of uncertainty. The third thing was that somewhere the mid and small cap, the valuations in the Indian markets were slightly on the higher side. So again, it was a good point to see that correction. The fourth or the fifth point, which we think is very important, is Trump re-election. Now, what Trump typically does is, or what he did in his first tenure was he created or focused on a lot of trade barriers by putting restrictions on China import. There were some products from other countries which he banned. Now, what these kind of policies do is they create inflationary pressure within the US market, because if you are making in US, you'll obviously have to make it at higher cost and all. So that led to the US 10-year yields going up in anticipation that the rate cuts, which had just started 2 quarters back in the US, would be delayed. See, US is still at a very high interest rate regime. Europe has gone through a very high interest rate regime. The European central banks had to increase the interest rate post the Ukraine war. USA also was facing high inflation. Now, with Trump coming in, people will want to see 1 or 2 quarters how he behaves, what all barriers he might creates on the imports, and what all he wants to make in America. Now, this led to another sixth point was that typically when FII sell, the rupee depreciates. And it's most of you are NRIs. Typically, Indian rupee in last 25-30 years has depreciated against the dollar by 3% annualized rate. It's not a linear rate, so it might depreciate 8-9% over 2-3 years, 1 year, and then it might stay stagnant. So if you see, when you might have gone to US the 5 years back, 10 years back, you would have seen a 60 rupee rate. Now 85, you would have seen 70. So 3%, 3/4 is average depreciation that happens. Again, that also put on the pressure. Last point was that Indian earnings typically start to come one month after the quarter gets over. So our earnings were slightly below estimate. Maybe we had run up pretty well and run up well, but the festive season was slightly late. So the purchases for the festive season started late, and the wedding season typically in India was also delayed because some people believes in stars and look for auspicious dates. So that was also delayed by couple of months. So keeping that in mind, some of the earnings were below estimate. But after the selling, do we think the markets are expensive? That's the first question. I have a question. Okay. Has anyone put in a question? No. Okay. I thought there's a question in the chat for me. Just checking that. So, just to give our global friends a context, we measure market something in terms of how expensive they are. So, if you see in last 5 years, we were around that 24 kind of average. Today, after the correction, we're down to 21, 22 times. Again, it shows that the markets are now fairly valued. There's something called a book value of a company, which shows that again we are below the long-term average of 4. We are 3.5. So we, on the large cap side, we are appearing to be attractive. It's a good time for investors to start coming in, taking some allocation into the Indian markets. Small caps and mid caps are still slightly overvalued. We would want to remain cautious for maybe another quarter over there. But to give you a sense, this how to tackle the volatility in the market, or how to effectively manage your portfolios, whether you are invested in Indian equities, whether you're invested in global equities, whether you're invested in gold, whether you're invested in real estate. The most important thing for investors to consider is, as we say, never put all your eggs in one basket, is the concept of asset allocation. And time and again, I would want to show you that different asset classes do well at different point of times. Typically, as a human being, we get influenced, or we try to come into that asset class when they are going through a very good time, or they are on top of the valuation. We would buy a real estate maybe at an expensive valuation, and then it might not move. Similarly, for a stock, we might buy something at high prices, and then we
Hello,
might
hi
say that
Aishwarya.
it's come down. So
I
it
am
is
Aishwarya
important
from
to
my
maintain a
patient.
right balance of asset allocation. Now, I just to show how different asset classes behave, I've just taken a small example. Indian equity market is highly correlated with the US market. There's a 0.4% correlation. If Indian market goes up, US market also goes up. But Indian equity market is not directly correlated with debt and gold at point of time. So for our clients or any investor, it is important to have an asset allocation in mind, whether he wants to be a balanced investor, he wants to be an aggressive investor, whether he wants to have some gold in his portfolio, whether he wants to have fixed income in his portfolio, whether he wants to have, and I'll come to avenues, how one can look at different avenues in within that different asset classes. Now, why this study is important is, first of all, my dear global investor friends, I would want them to just basically plot in their mind what sort of asset allocation gives them the comfort, because see, everyone will have different risk profiles. There could be a conservative investor, there could be a moderately conservative investor, there could be a balanced profile investor. He likes to balance because, again, why this risk profiling or asset allocation is important, because different asset classes come with different risk. If you were 100% invested in equity, a COVID would come in, your portfolio would fall down by 30-40%. But does that mean equities do not give good returns? Possibly in last 25, 30, 40 years, equities have given the highest possible returns. And there have been global events. I showed you the 2008 chart. I showed you 2014 chart. There was a dot-com also. So it is very important to follow right set of asset allocation in your portfolio. Just to add the point, each year the winners rotate. I've taken this global chart for last 10 years plus. You will have years where global equities would perform, Indian equities would be average, real estate would perform. So basically, the idea is different asset classes perform well in different years. It's not any asset class is good or bad. Within asset class, like just to show you, within equity also, the sectors also rotate. It's not just that one sector does well all the time. I believe a lot of you are working in the IT sector, and most of you would be able to relate to this. When COVID came in, lot of focus and money started flowing towards IT. People had to move their systems digitally. Work from home became a very important thing. Then 2021, the same phenomena continued. But then started coming that IT sector was overvalued. Next 2 years, it was amongst the bottom performing sector. So it's not that a TCS, Infosys, or an Accenture or a Cognizant are not good companies. They also go through different cycles. How well we understand those cycles, or how can we participate in the markets at different point of time, becomes the important key questions. Just to give you an example, in 2022, when the Ukraine-Russia war happened, even the US markets corrected by 30%. Indian markets that year hardly corrected by maybe 10-12%. So what it shows that is there will be scenarios globally also. In Germany also, you would have seen the inflation pressure on it. Typically, fixed income returns in Germany, because the German Bund is almost trades at 0% interest rate, does not give you any good option return. So how do you park your fixed income? Do you keep it just idly in the bank? There are multiple options on the fixed income side also. So one bottom line is that it is very important to follow asset allocation. Now the key question comes, how can I participate in the markets? So Indian markets, there are 3-4 ways where you can take ownership in the company. You directly buy the stock of the company. But for that, you need to spend time, you need to do research on the company, you have to track the earnings. Or you say, I want to participate through the mutual funds. if you're an advanced investor, if your ticket size allows you, maybe you participate through PMS and AIF. In PMS, the typical ticket sizes 50 lakhs, and AIFs, the ticket sizes 1 CR. In mutual funds also we have categories, just to give the for the general audience. There will be a mutual fund, a large cap oriented mutual fund that would invest mostly in blue chip companies. Again, the concept of low risk, low return remains there. Then you have mutual funds which have mid companies, companies which are not the top 100 companies. They mostly are between 100 to 250 companies, but are growing faster than the large cap companies. They are the emerging companies that would go on to do well in the future. And then thirdly, you have small cap mutual funds. Now, small cap mutual funds would invest in companies which are pretty small right now, but are growing much faster than the overall GDP or the industry. But again, the risk element involved with them is the highest. Like if a large cap would correct 10%, a small cap fund could correct 20%. So this is broadly the category. But in the Indian mutual fund industry, there are funds which are into the flexi cap category, or there are theme based categories also. Just for easy understanding, flexi, as the name goes by, a fund which can have a mix of large companies, mid cap companies, and small companies. So basically, it gives the ability to the fund manager to move around within the market cap allocation. Then there are theme-based fund. As I told you, different sectors rotate at different point of time. The high risk, high return, or the riskiest one are the theme-based funds, because to enter into a theme at a right point of time or predictability becomes slightly difficult, or you have to really be up the curve or be in constant consultation with your wealth advisor, who can tell you when to buy particular theme. There can be IT based theme fund, there could be a defense based theme fund, there could be an energy based theme fund. So multiple themes play, people want to play tactical allocation also. So some people want to have 70-80% core investments in mutual fund and PMS, maybe 10-20% they might want to play a tactical call, that if a banking sector is looking good, so they might buy a fund which focuses around banking. Or they could buy a in COVID, a lot of people bought pharma based funds and it played out pretty well for them. So as I told you, with mutual funds, you can enter with a very small ticket size also. It's not typically minimum investment in a mutual fund could be 5-10,000 rupees, and there's no upward limit until unless that mutual fund has some restriction. Maybe out of closer to 5,000 mutual fund, there would be 40-50 that would have restriction in the inflow. Otherwise, mostly mutual funds take in the flow, whatever the people are comfortable investing in. PMS, on the other hand, is basically a portfolio management scheme, which is basically a boutique portfolio which is created for the clients, and it is more dynamic compared to the mutual fund. Mutual fund in India have become pretty big. The AUMs have crossed 40,000 crore, 50,000 crore, 70,000 crores, 30,000 crore. Now in that scenario, mutual funds typically just like to work relative to the benchmark. Vis-a-vis PMS, which basically buys boutique, which is boutique in design, buys stocks or buys those particular themes which are currently at an attractive proposition, or the valuation looks attractive. But at the same time, fund manager can be pretty dynamic, not to immediately buy, or he can divide the allocation over next few months in those particular stocks, evaluate it, build cash positions in the portfolio, unlike a mutual fund where the ability to generate cash because of the high AUMs is very difficult. Typically mutual funds, some of the mutual funds, due to their size, have more than 50, 60, 70, 80 stocks in their holding. Mutual funds are basically not investing much outside those 500 companies. PMS AIF typically build concentrated portfolio of 25-30 stocks with the ability to generate higher alpha. They also invest in some companies outside of the 500, which might be new emerging ideas. See, what happens is a lot of these companies, a TCS or a Infosys, are mature companies. But you have to identify maybe a company that is working in the AI side, it's working on machine learning, something which the large companies might not be doing and might be growing faster, 3, 4, 5 times faster than the economy. So that flexibility, a lot of PMS AIF fund managers can work with. Just to give you a sense, I will just quickly like to discuss couple of ideas on the PMS side, and you guys will, despite sitting in Germany, relate to some of the ideas and how India is growing. So we do this PMS called Stallion PMS. I'm just seeing if there's a question in the. Acha, these are email. There's no question so far. Sure. So we generally for our clients do this PMS, which basically bets on urbanization of India, or people who are moving from the lower middle income group to a middle income group to upper middle income group, or even the HNI group. Now, if you see in that space, we typically in India used to have a lot of food from outside, maybe street food. Today, the way India has food through Zomato app, the Swiggy app, the way of ordering has changed. That shows that a lot of people are moving on the upside of what they used to earlier do. So keeping that in mind, there's this stallion fund which we do, basically focuses on four M's of the philosophy. Basically, they look at companies, and I'll show the companies in the next slide. They focus on market leadership. They focus on market opportunity. In terms of valuation, there should be margin of safety, and last but not the least, which is very, very important, the management has to be honest, it has to have a good track record, and it has to do walk the talk. So, keeping that in mind, these four philosophies, the fund manager has picked up companies which have done phenomenally well. And I would like to show you the underlying of the portfolio. So as I was telling you, a lot of people who've started ordering online, Zomato has become the largest food delivery company in India. Not only that, Zomato has got a subsidiary, Blinkit. I don't know how many of you last came in India, but cities like Bangalore, Delhi, Gurgaon, Bombay have gotten used to this concept of 10-minute delivery, 15-minute delivery. You click on something and 15 minutes it's delivered to you, which is not even happening globally anywhere. So this company is through its Blinkit app is giving very difficult competition to Amazon and Flipkart. Flipkart, by the way, is owned by Walmart, which are leaders in the quick commerce and the grocery concept. Now Zomato has become one of the through Blinkit become one of the fastest grocery delivery company in the country. Like, imagine I'm sitting here in the meeting and I need headphones for the meeting, and 15 minutes the headphone would be delivered to me. So that is the kind of change that is happening in India. A lot of us used to travel in trains and all. Now you go to the airports, a lot of people, Indians, are flying. We've mind you, unlike Germany, we've got a 140 crore population here in India. So the airports, despite so many airports coming in, so many flights coming in, Indigo commands a 65% market share. Trent, which has been a six, so the stock has gone up 5, 6 times in last couple of years, primarily because of this brand called Zudio, which is Tata's brand. Tata basically got Zara into India. In Germany, I'm sure there would be a lot of Zara stores, which is owned by Inditex. Zara was basically catering to middle class, upper middle class kind of people, where people would be buying tops or shirts for 2,000 rupees, 3,000 rupees. Typically, Zara works on quick commerce, wherein quick supply chain model, where if a design is doing well, quickly how quickly you can replenish this design, how the display should be. So Tata had a joint venture from them with them. They learned the tricks of the trade, started this brand called Zudio, which was basically offering clothes at literally one-fifth the price of what Zara was. But it has become the fastest growing retail brand in India. And the trend stock has gone up 6-7 times, because their profits through this brand have gone up 10-20 times from what they used to be. A lot of people are moving to professional wealth management players. Nuvama, it is the second largest listed wealth management company and asset management company in India. It is doing phenomenally well. Red Tape, I'm just taking some of the names which guys might be able to relate to. Red Tape, people are moving from using non-branded shoes, local made shoes, to branded shoes at affordable prices. That's what Red Tape has taken to people. So if you see the stock, if you see the portfolio of the fund manager, this basically idea is to play bet on Indian growth story. Do 140 crore people will move up the ladder. They will buy things which are more valuable and higher in value, absolute value, from a local made shop. So these things show that a fund manager, if he can identify such kind of trends, can this be an alpha generator in your portfolio if you are invested in equities? So that is one of the ideas we do. I will move to some of the other ideas.
Ishkaran, you're there?
Yeah.
Okay.
My screen is visible, right?
Yeah, it's there.
Do you
Just
want me
for
to spend 1 or 2 minutes on mutual funds also, or people know about that? I don't actually know the depth of the participants, so I thought I'll just quickly ask a question. I covered one of the boutique ideas or boutique proposition which we regularly take to our clients, but do you want me to?
Yeah, maybe you can just touch upon. So there is varied knowledge
Yeah,
about these
just a
mutual
second,
funds.
I'm just
So
sharing
let's
that.
cover that up. Yeah. So in the meantime, if any of our guests and participants have any questions, feel free to ask. So, or you can also type it into the chat.
So, are participants mostly, do they invest in India, or they are global investors or investors in the German markets? If someone can put the question on the chat also, or answer something, so it'll be good to give you an idea. So I was telling my friends here, this is some of the top performing large cap funds which we do. Unlike, see, Germany may be growing at 1%, 2%. Let's not count in last 1 or 2 years because of the whole war issue. But typically, German economy is not grown more than 2-3%. Inflation there is also 1 or 2%. If you go to last 5-10 years, 15 years history, discounting the last 2 years. Unlike Germany or US, see, India GDP is growing at about closer to 7%, an inflation rate of 5-6%. So you're talking about a nominal GDP growth of 12-13%. Typically, we look to identify those fund managers or companies which are growing 2-3% faster than the economy. So if you're looking at India purely from a large cap or a blue chip point of view, you could easily look at a 15-16% growth over next 5-10 years, because India currently is a $4 trillion economy. Next 6-7 years, we expect India to become a closer to 9-10 trillion dollar economy. Now, last 5 year, 10-year story, if you see Indian large caps or just the plain vanilla index has grown at 16%. The top 100 companies have grown at 17%. If you see here, I'm just highlight one second. If you see the last two lines, the 5 year, the large cap companies have grown at 16%. That's the index. The average funds would have grown in the range of 18-19%. That's the kind of growth that has given. As I was telling my friends, we look at a lot of diversified funds, which are mix of multi-cap, large cap, mid cap. There, the growth is even higher. The average return over last 4-5 years has been in the range of 22-23% return. Even if I take a even longer average of 10 years, you'll see a average growth rate of 14-15% CAGR year on year growth. If you talk about smaller companies or the mid companies, so if you see mid companies, last 5 year growth has been closer to 28, 29, 30%. Even in the 10 year, you are in the 17, 18%, 19% zone. In small cap, the returns are even higher. They are about 30, 33% year on year growth. In a 10-year period, it's a 20% growth. So if you're talking about 20% growth, unlike the developed markets, I'm just giving an example, your money doubles every 3.6 years. So imagine the power of compounding or the multiplier effect that would have had in your portfolio if you would have participated in the Indian equity markets. But that is past. In future also, we think there is a lot of scope because currently we are just at $4 trillion. Just to give you small examples, the AC penetration in India is just 6-7%. So imagine a developed market where the AC penetration is at 70-80%. Like I'm talking about Asian markets because European markets, European countries are still cold. Then you have the car usage is less than 7-8% of the people own cars in India. So imagine the kind of opportunity that still exists in India, and I believe it is still going to be one of the fastest growing economies in the world. So coming back to what my idea was to show this mutual fund performance to my friends was that yes, if you see 1 month the markets are down, that is the element of volatility in equity. They're going to be volatile. It's not fixed income which is like a linear line, but it is important to participate in that growth, buy when actually markets are down, and generate that kind of return in the portfolio. Just quickly on one second, and I was as I was telling my friends about theme-based fund, like an ICICI technology fund. uh, in last 2 years it has done well, but if you go to the 3 year return, when I told you the actual problem started to come in IT, because before that it had had a phenomenal year return. So if you enter 3 years back, you would think that I entered at a bad time, but maybe if you look at 5 year return, it's a 28% return. So your theme based funds can be slightly risky. That's where you always should have consultation with your wealth manager, wealth advisor to take participate in such kind of themes. So coming back to one more boutique theme which I really like, and I like to build it across my client portfolios if for my clients, is somewhere I like to build a dynamic portfolio for my clients where a fund manager within market caps can take dynamic calls, whether it is to increase exposure to core companies or increase exposure to satellite companies. What do I mean by core companies is core companies could be companies which he would like to hold into the portfolio with a 3-4 year 5 year horizon, right? Certain companies he would like to build in the portfolio from a short term horizon point of view. Case in point, I would like to show you the, like last time, show you the fact sheet of the fund, and I will be able to relate, you all will be able to relate to the strategy of the fund manager. It's called buoyant. Now, what buoyant capital does, or the fund manager Jigar Mistry, what he does is he balances between large cap, mid cap, small cap, that is on the market cap. But he also focuses on having a core and satellite portfolio. By core portfolio, what do I mean is he will have certain holdings in the portfolio where he is bullish over next 3, 4, 5 years. He thinks that, supposing I talk about Zomato, I talk about the food delivery. Maybe the fund manager says, I really like this theme for next 4, 5 years, right? So that will become part of his core portfolio. But at the same point of time, just to give you an example, in India, railway theme or defense theme has corrected by 30%, right? In last 1 month, markets have just corrected by 10%. Some of the companies have overcorrected, and he might think that there's a tactical play to play out. He might buy it as part of the satellite portfolio. Within satellite portfolio, also what he does is certain themes he thinks which are cyclical. By cyclical, I mean certain sectors do well once in 5 years, once in 6 years. Classic case is infrastructure theme will not always do well. In India also, we've seen 14, 15 year cycles. 1 year, 2 year, the infra theme will do well. Next 2, 3 years, they could go through a bad cycle. um, Metal is a classic case of cyclical. Metal, you'll see companies not do well for 2, 3 years, and suddenly there will be a cycle where suddenly demand in China picks up, the industrial production goes up, so demand for steel increases, and that year you'll see metal stocks going up 100%. So that's a classic example of cyclical. So in his portfolio, as part of the satellite, he'll have closer to 40, 45% in cyclical or turnaround companies. Now, just to give you one example of a cyclical company, as I told you, auto is also pretty cyclical in India. He picked up this company called Ramakrishna Forgings, which was a cyclical play. But very interesting name in turnaround he picked up. Some of you, if you track India, Paytm was very widely used, but 8, 9 months back, government put in a lot of restrictions on Paytm with the KYC issue and all, where they could not keep money in the wallets. They had to close down their Paytm payments bank. What the company did was the company adhered to the government, shut down the Paytm wallet, Paytm payments bank, but the interface, if you go to a fruit shop, if you go to any vendor shop, Paytm still was available in a shop. The interface to make the payment was still Paytm, but at the back end, what he did was he tied up with banks like Kotak, Yes Bank, and all. So the interface let the money to come through Paytm, but money had to get settled into a different bank account. He bought the stock around 350, 400 as a turnaround story. Indian markets have corrected. Despite that, last month the stock is up more than 20% plus. And since that level, when he picked up from 400, it's close to 850, 900. So that is a turnaround story. He might exit a Paytm in maybe 60, next 30, 60 days. We never know, but it will not be part of a 4, 5 year holding in his portfolio. But maybe an ICICI Bank, an HDFC, State Bank, he thinks that banking is going to play out well over next 2 years, 3 years, will be part of his core portfolio. So what this kind of strategy, a dynamic strategy, it does is it helps you manage volatility in your portfolio in a more efficient way. The fund manager has beaten the index by almost 600, 700 basis point over since the time he started in 2016. Last 5 years, he's generated a 8% alpha. Last 2 years, he's generated 8% alpha. And in last 1 month, when the markets, or last 6 months, when the markets have been volatile, he still generated that alpha. So that what it does is it shows you how a fund manager should be dynamic in different points of time. So that was somewhat on the equity. As my friend had said, that it's very important for our friends here to understand bit about fixed income also. unfortunately, the German bonds don't give you much return here. But sitting here in India, we get a good return on the some of the bonds also. So or fixed income products also, because you guys might be putting some money in FCNR account or FCNR FDs and all. But there's a life and return outside them also. So typically how a bond works is you would invest in a bond and bond would give you a coupon on it. Now, depending upon the kind of company you're investing in, just to showcase to my friends here who might be able to relate to this name, one of the largest gold loan companies in India is Muthoot and Manappuram. They are one of the top two largest private gold players. Now, for Muthoot, a company which is an NBFC, it is part of the Muthoot Papachand group, fetches you, and gold prices have gone up. So, mind you, your underlying your risk with people who've taken loans against that gold, and typically people get loan against gold at 18%, 20%, 22%. That's the kind of loans people take at. This company would give you a coupon of 9.5%. So it's a good option for you to invest in, just to have stability also. Maybe some of you require in India certain cash flow, or whatever your money is sitting there. It generates a stable return for you.
Yeah.
Again, a
So,
gold backed company, Kirtana, it's slightly
so
higher interest yielding in company. It's again a gold back 100% gold back company. Uh, Fetches you about a 12% coupon. So
so
these are some of
Ishkaran,
the companies
hello,
which we can invest
are you able
to
to hear me?
maintain stability in the portfolio.
Hello.
For some of our friends who have a 1 crore ticket to invest, there are infra funds which we do. There, the target return on the infra funds are 18-20%. Most of the infra companies get investment from Canadian pension fund, US pension fund, US state fund. So they target an 18-20% kind of IRR. These are some of, as you know, in India, a lot of tolls have got digitized. Not a lot of tolls, 95% of the tolls have got digitized. So it's a payment where the cash flow, even from the road, solar plants, are generating a certain IRR. So you can participate in such kind of funds. So
Sure.
depending
So,
upon within
Ishkaran,
fixed income.
hello. Sorry, looking into the time, I think we need to probably have a second session. It's very interesting. Too many topics that's really very well explained. Looking into the time, I wanted to request you if you can wrap up in the next 2-3 minutes. Then I would
So
like
I'll
to hand it over
quickly
to
answer
Gurpratap.
some of the questions.
Yeah, please.
So, is it worthwhile investing in ETFs or not? It is absolutely good to invest in ETFs or index funds. ETFs you invest through Demat, but typically for NRIs, it's difficult to open Demat's account and invest in ETF, because it has to be bought during market hours. One can invest in index fund or actively managed mutual fund. Unlike US markets, where it's very difficult to beat the benchmark, India is still a high growth economy. So most of the active fund managers in the flexi cap, mid cap space invest in companies which are able to generate alpha, and they are able to beat the index. Basically, ETF is nothing but an index fund. You can invest in index, or if you want to generate that alpha, see, index will give you what the index is giving. But if India is a high growth economy and there are a lot of alpha generating opportunities, you should look at either actively managed fund manager to generate that kind of alpha in the portfolio. Is it possible for NRI to direct invest in corporate debt bonds? Through NRO accounts, yes, you can invest in these bonds. There's no problem with that. NRE account is we'll have to check for Germany. For NRE accounts, can it be done or not? But NRO accounts, there is no problem at all.
Thank you very much, Ishkaran. Just as a note here for all the participants, what we basically have here is to seed the investment mindset. Many of them are experienced investors. Some of them are like me, not so experienced, and also have some kind of no risk appetite, very less risk appetite. But given that diversified portfolio we saw today, it is very important as salary earners also to see how we can grow the wealth, right? Because there is a good saying where you have 70-30. So just spend 70% and then save 30%. But that 30% is what compounding is really important. And after Sunil explained me about this, I thought I lost 23 years of my savings. Yeah. So that is the topic where I felt it's very important for the community who are young and energetic to really know this today, while it takes to get warmed up and start investing in the next 2 to 3 years. And then once you are spending 23 years in Germany, I hope you would not be in the same boat as what I am today. So having said that, please reach out to Mr. Sunil Kumar and Uma Devi, and
Yeah.
I think they will help you out understand what I understood now after 23 years. Yeah. So, thank you very much, Ishkaran. Any last words, Mr. Sunil Kumar, before I hand it over to Isha, Miss Isha Kotwal?
Yeah, for all the participants, see, in India definitely will be one of the most attractive markets for the next 10-15 years, because it's an emerging economy. That's what we have to realize, and there's no better country than India at this juncture, right? And that's the reason it's called as Amrut Kal, right? And second thing is, for all the participants here, we will, when you are investing through NRO, NRI, NRO, or NRE account, you will not invest in WinNest. We will be directly taking you through different, asset management companies. We are only an intermediary, right? We will not be taking your money. This is what I wanted to, reiterate, that the investment will be rooted through us, but it will be not be invested in WinNest company. It will be invested in an ICICI or a Bandhan or a HDFC or a Templeton or a Mira Asset or a SBI or a Aditya Birla or a Tata or a Nippon India, right? The money will be directly going to asset management company. So this is what I wanted to share. And yes, it's time for NRIs to diversify and create humongous wealth as a retirement number, or as one part of their retirement fund should basically grow in this part of the world, which they really belong to, is what are my parting statements. Because prosperity is the birthright of every individual born, and everyone should attain it, Riaz. That's it from my side. Thank you so much.
Thank you very much, WinNest. And now I would request Ms. Isha Kotwal. She heads the international operations for Total Environment, and she has been working with NRIs in Germany and globally in Europe, explaining about Total Environment homes, which have the unique offerings. So while we invest, the growth will be through Isha Kotwal. Over to you, Ms. Isha. You're on mute. Please unmute yourself.
So sorry for that. Thank you so much, Riaz. Thank you so much, Vishwa, and all the members of Kannada Sangha Frankfurt, to give me this opportunity to present the brand amongst all the customers, all the clients who are actually here. And I would really like to thank each one of you who has actually taken time to hear us out. So thank you so much for that. That would be the way I would want to start my conversation. Now, so before I give you more idea about my brand Total Environment, let me just run audio visual of our company. And then after that, I'll just, it's a very quick 2-minute audio visual. Let me just run that.
Just a
I'll
moment.
speak.
Mr. Ishkaran, can you please make Isha Kotwal the host? I think the host is with you.
Yeah, just a second, I'm trying.
Yeah, you can right click on her name and then make host. Yeah.
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 Perfect.
Yeah, please go ahead. Thank you.
Thank you. I hope you all can see my video.
We are not seeing your screen. Probably you'll have to share the screen, please. Yeah, it's coming up. Yeah, please go ahead.
I think before Isha starts, Riaz, can you just announce, like, on the, sharing the email ID in the chat?
Sorry, I didn't get you, Vishwa. Can you please
Yeah,
come again?
I can announce, I
Yeah,
just to say everyone who is participating today, we have a lucky dip contest, where, two winners will get. One is a free financial check and advice from WinNest, and also up to 5 lakh from discount from, from the total enrollment on purchasing the property. So request everyone who is interested, please put your mail ID in the chat. So we will announce, the winner in the later, and we'll send the email. Okay. Thank you.
yeah. Okay. Thanks very much, Vishwa, to bring that up.
Yeah, go ahead.
The volume is not there. Probably you'll have to play the volume, or it's silent.
That's the maximum.
Okay.
Yeah, it's from my side, it's the maximum.
Okay.
I don't know if it's just me, but I barely hear any sound. Yeah, I don't hear any sound actually. So
Very feeble. It's very feeble.
Oh,
I'm able to hear
okay.
it, but it's very feeble. That's why I asked.
Okay.
Yeah.
Okay, no, it's fine. Then let's just
Okay.
go ahead.
It's a Pushpaka Vimana. You can see that. It's more of information. Probably the volume is very low. I'm able to hear very less volume.
Very particular in terms of what I want and the house I wanted. We saw quite a few homes. There was nothing, no other builder of home appealed to me the way Total Environment did. It wasn't a decision, I think, that we had to think so much about. We came in, we saw, and we were like, wow. This was the one that was a huge selling point for us. It was very different, not something that we'd seen elsewhere. It was not just a wooden deck, it was a wooden deck along with the garden and the space, this long space that is there. That meant a lot.
Okay, so I think that was, can you hear me all? I hope you
Yeah.
all can hear me. Yeah, great.
Yeah, we can.
So,
Please go ahead.
so that was a little bit of a video that I just wanted to show the kind of homes that we've already delivered so far and the ones that we are actually developing. So just to give you an idea about Total Environment, we are an architect-led. So if you look at the promoters, they are Mr. Kamal Sagar and Shivani Sagar. So we are an architect-led design and development firm known for making unique and sensitively designed homes for our customers based out of Bangalore, Pune, Hyderabad. The only developer to have a project in USA and Texas as well. So we have earth-sheltered villa properties that we have delivered, that we are delivering, developing in Texas, which is composed of around 55 acres with 121 homes. So I would not actually call us in the segment of a luxury developer. We don't call ourselves a luxury developer, but a developer which finds where we have a connect with a customer. So we have a trust and a connection with a customer, and we are focused on people-centered design. So we actually put the people at the core of the design, and the intent of the developer is to give you quality of life. That is what we more focus on. So we've never wanted to become the largest architectural firm or a celebrated designer or win the most visible project developer, but the intent was always to improve the quality of life so that we could inspire the artist in you, and so that you could passionately and meticulously create work, and that would be impactful and create a difference in the world. So that was always the vision of Mr. Kamal Sagar when it came to developing these kind of beautiful homes. Now, As I said, that we are known for making unique architectural project. So what you see on the screen, this project is called as Windmills of Your Mind, a project that we've already delivered at Bangalore as a location. The location is Whitefield. These are called as earth-sheltered villas. So you've seen villas in UK, you've seen it in Germany, you've seen it in India. This is something which is very different. Why do we have these earth-sheltered villas? Is because they help in insulation, they keep you warm during winters, cool during summers, they help in surface runoff of water, rainwater harvesting, and they also increase the overall greenery of the entire project as well. Now, this is an actual picture to say this is not a rendering of any property. You can see a person cutting the grass here as well, where I'm just encircling, right? So that's one of the property that we've already delivered. Similar kind of homes we are delivering in other locations as well. Now, when it comes to so when it comes to gardens, one of the USPs about Total Environment is whether you're buying a 2-bedroom, 3-bedroom, or a 4-bedroom, and your apartment is on any level, it has to have a garden where you can actually grow a tree up to 20 feet of height. So what you see on the screen looks like a ground floor unit for you, but this is a 18th floor picture with a deck, water body, and a garden. And we have these large fenestrations so that maximum lighting and ventilation can actually enter and exit the home. So garden is mandatory, whether you buy a 2-bedroom or a 3-bedroom with Total Environment. Second, every home of Total Environment comes with these kind of red cut wire bricks in the external, if you look at the facade. They also age gracefully, and that is one of the reasons why we use these natural material as well. As a property developer, we give you 3 different options. You can go for an unfurnished, semi-furnished, or a fully automated home. I'm very glad to share with you that you don't have to spend loads and loads of monies on interior designer, because we give you a dedicated interior designer where you can choose from 9.2 million options. So you can have a customization done in your floor plan, material, color, brand, fixture, everything that you require. Now, what you see in the screen is also another villa property that we've already delivered at Hyderabad. And similar kind of villas are coming up in Frisco and as well as in Yalanka in North Bangalore as well. So since I would say the future of real estate development is totally focused on sustainable development. So we have already started focusing on sustainable development because we use renewable and sustainable material to make these homes energy efficient so that they can consume less of energies, and they also reduce the carbon footprint as well. So this is going to be the next future of future of real estate that we have started adapting it now only. What you see on the screen is again a villa community that we have in north of Bangalore. That's the map of Bangalore. So we have projects in north of Bangalore, closer to the airport. What you see as A is a plotted development that we have. What you see as numeric are the delivered properties of Total Environment. Very happy to share that we are a 28-year-old company, delivered more than 32 projects in Bangalore. And around 7 to 8 projects, what you see on the right-hand side, are our projects which are the under construction properties. Now, a lot of you must be also interested to know why should we actually invest in Bangalore. So in terms of why we should be investing in Bangalore is, now if you talk about Bangalore, that's one of the largest tech infrastructure company. It's called as a tech capital. It's with a modern city with a lot of infrastructure projects underway, fantastic weather around the corner. And we also have a lot of micro markets with right mix of social economic infrastructure, entertainment, schools, hospitals as well. And we have, so North and East Bangalore are the fastest growing property markets. And average rental values ranging between 3 to 5% and average appreciation ranging from 11 to 15%. Now, of all the different cities that you see, if you see, Bangalore is still rated as the #1 city in terms of rental yield. So that is around 4 to 4.45%. And even if you talk about the rental values, what we saw in the Q3 of 2024, for East and North, it ranges from 86,000 to 3,10,000. For North, it's around 72,000 to 2,10,000. And I'm talking about the high-end segment here because that is where we come into picture as well. And even if you talk about the kind of per square feet values for East and North, where we have our major projects, it starts from 9,500 to 14,000 rupees per square feet. Yes, so that's with regards to why we should be investing in Bangalore. Now, coming back to these are the completed projects of total environment that we've already completed so far. So even if you see our projects that we have delivered 27-year-old, what you see on the screen are projects which have been delivered 22, 23 years year back. They look as new as if they were just delivered, around the corner only. So they look very, very new. And this is a tapestry project that we have in Frisco. Again, as I just said, this is a 51-acre property with 121 homes. And this starts from around 1.65 million US dollars. And then we have different projects in North Bangalore. We have it in East Bangalore. We have plots starting from 1.6 crores. We have apartments, 2,700 square feet apartments starting from 4 crores plus GST. And I'll not go into too much of detail. And we also have a property in Pune as well, which starts at 4.5 crores as well. Now, I understand that, of course, these projects are a little expensive, but what makes it affordable for people is the kind of payment plans that we actually have. So we have a 1090 payment plan where you just pay 10%. So for example, if you're buying a property worth 4.8 crores, you just pay 48 lakhs. You take up a loan of 75%, which is 3.6 crores. Of the loan that you take up, the entire interest from now till possession will be taken care by total environment. So it means 48 lakhs is what you pay from now till December 2028, because most of our homes are delivering in 27 and 28 effectively. So 48 lakhs is only what you make. You take a loan, you pay nothing on the loan, all interest is taken care by us, and then you pay the remaining 15% on delivery. How this makes it a profitable payment plan is because if you're buying a property worth 4.8 crores and assuming that in 3 years, because rate of inflation and the increase in the prices of labor, cement cost, what if it's 12% per annum as well? So even if you increase this by 36%, you will easily make 1.5 crore as your profit. So 48 lakh is what you invest and 1.5 crore is what you get as a profit before the final 15% payment that you make at the delivery. So that's a very attractive payment plan. You make 3 times. So your capital invested was 48 lakh rupees, but you make 1.5, 1.6. And that's a conservative figure, I'm telling you, because I have been in this company for 6 years. So over the last 4 years, the appreciation has been thrice. So the projects that we sold in 2019, the property prices have increased by 3 times effectively today. So I'm giving you a very conservative figure. So that's one of the payment plan that we can look at. The other payment plan is a 20-20-20, where you multiply this by 5 times. So every year you have to make 20%, and delivering being in 27, you have a lot of time to make the payment as well. Yeah. So yeah, that's a little, I'll not take too much of your time because, so just in the nutshell, I would like to say is that if you're looking at a property developer with a great return, as I just said, that the returns that we've been seeing in Bangalore for other developers maybe twice. If you're seeing it something like which is 2.5 or 3%, 3 times the amount of monies that you've invested. If you're looking at a developer where you're just paying a 10% payment and you're not making any more payments till possession, or if you're looking at a rental yield of 6 to 7%, I'm sure if I would ask you what is the rentals that any developer would get in Whitefield, I'm sure the kind of answers that I would actually get is 1 lakh, 70,000, 60,000. You'll be surprised to know that our project, Windmills of Your Mind in Whitefield, is already fetching a rental of 1.5 lakhs, 2 lakh, 3 lakhs. That's the kind of rentals that these people are enjoying. And these properties, which were sold around 8-9 years back, were just 90 lakh rupees. And today they are transacting at 5 crores. So you can imagine the kind of appreciation that people have seen in our properties and the kind of yield that people are generating. So anybody looking at anything for investment, looking at end use, you can contact us. We'll be more than happy to help you. And anyways, my team is there in Europe. We can connect over a one-to-one discussion as well. Thank you so much for your time.
Thank you very much, Ms. Isha, for explaining very nicely about total environment homes. It's quite impressive. So today's session, I think it gelled well, though we had not planned it that way. That on one side you invest, grow your income, and then grow it multiple times. At the same time, you're also offering it in a very nice way to multiply it over several years. So all in all, so to the participants, any questions, please feel free to ask. We
Yeah,
have 10
Riaz,
more
I'm so
minutes.
sorry. I was a little fast, but I had a
Yeah.
little less of time and more to speak. So sorry for that. if
No,
you
no
felt.
worries. I think you're just on time. So thanks for managing the time well. You're a nice Scrum Master. Yeah.
Yeah. If there is
So,
any question, I'm more than happy to address.
yeah.
Anybody wants to ask anything.
Yes, there are a lot of investors in Germany. So it's only about they need to get warm up with the information you have given. So
Yeah,
please
yeah.
feel free to
I think I
ask.
must.
Yeah, let us give them a minute. If they have anything, please ask. If you can share back the host to me, Ms. Isha.
Sure.
Let me see if there are any questions in the chat. I see a couple of guests are interested in the lucky draw. That's good. Yeah, I would encourage everybody to just participate. It's nothing to lose. So you get a free consultation with WinNest and also 5 lakh discount upfront. So 48 minus 5, yeah, 43. Good investment. 5 lakhs you can already invest with WinNest. It's a good offer. So that's great. Good. Yeah, any questions? Please feel to ask. Any questions from our community? Vishwa, you need to see if you have any questions that you would have got offline from our members asking for it during our KR session with total environment.
No, I think after the total environment, the introduction happened. Of course, many were very interested. Okay,
Yeah.
to more know about the property, and this is a good opportunity for them. Many of them joined here, and they got to know more about the property.
Yeah.
Sure, already people they contacted, Kadambari and also the Radhika who are present at that day. Yeah.
Yeah.
So I don't see much, but anyway, I'm sure they have
Good.
already their contacts and the details which we shared, and
Mhm.
also we shared in the email. So sure, they will contact soon everyone.
Yeah. Just as a note, a lot of people would be traveling to Bangalore or India during the Christmas vacation. So feel free to go and view Total Enrollment. It's not a marketing campaign. It's basically to seed the information in our community to have wealth and grow, and also can get free consultation with WinNest to at least think of starting to invest in the right direction.
Yeah.
So that's all I
And
can communicate.
yeah, and Reyes also, Isha, maybe you can also put us some light on, like, you were also coming on the Luxembourg, right? I saw the post.
Yes. We are
Yeah,
coming to Luxembourg.
because it's
Yes.
just a 2.5 hour journey from, Frankfurt, down,
Yeah.
Germany. Maybe you can tell people who are interested can also come to the Luxembourg if they are really, yeah.
Got it. I think Radhika, are you there? Radhika?
Hi, Isha.
Radhika, can you just share your Luxembourg EDM if you have it? Just
Yeah,
to
sure.
some people can take screenshots as well.
Sure, Isha.
You
Can
can
you
share
make
it
a
with
host?
we can share it with Vishwa. Then I think we can basically post it in our community.
Yeah, sure,
Yeah.
we can do that.
Okay.
That is also, but if you have something you really wanted to share it on this place, it's still fine. Just you need to make her host, Riyaz. Yeah.
Yeah, sure.
Or
To
you can
Radhika,
put
is
it.
it?
Yeah. Also, you can put it in the chat. In
Yeah.
the chat, you can take a photo and then upload those photos. Automatically, they come into the chat. Okay.
Correct. I think that's better. Good. Any last words from you, Ms. Isha?
Thank you so much. I just want to thank all of you to give me this opportunity, and of course, all the participants who have actually taken 1.5 hours from their tight schedule to actually hear us out. Thank you so much for that. And just wanted to, just give a piece of advice that, I know people are actually coming. It's Christmas time, so people will be traveling to Bangalore. Please do give us an opportunity so that we can showcase our homes to you. Because as I just said, a lot of people have this myth about total environment that our homes are end use homes. It's not an end use home. It's an end use home and an investment friendly home as well. Because intent of an investor is what? To invest as less money as possible and to gain maximum benefit out of it. So give us an opportunity, maybe a 20-30 minute Zoom call or a one-to-one session. We'll let you know how you can multiply your monies with total environment. And it's for everybody. Anybody who's a NRI, OCI, POIO holder can buy a property, and you need not come to India to do any documentation. That is another thing that people feel. You can sit in London right at the comfort of your home. We can do a e-site visit. We can do all the documentation. We get your loan closed as well. You need not come to India. You have to come to India to only do the registration. Otherwise, you're not needed. So that's another query that people generally have.
Wonderful, wonderful. Thank you very much for the session, and also I thank all the participants who have taken the opportunity and understood the diversified assets investment. And maybe last 20 minutes we have really understood total environment. Thank you very much for that, Ms. Isha. Any last words from WinNest before we close?
Yeah.
Mr. Sunil? Yeah.
Thanks, Isha. It was wonderful, as part of, diversity and diversification. Definitely real estate is one of the sought after asset class in India. We really appreciate,
Thank you so much, Sunil. Thank you so much. To be very honest, I have limited knowledge on stock, but whatever I learned today, I learned from your sessions only. So that is only I can say.
Yeah. See, we say a wise investor is a knowledgeable investor, right? And it is really a blessing to be born as an Indian at this point of time and being an Indian, because we are one of the most, I can call superior markets with all the wisdom, and the next 10, 15, 2 decades definitely belongs to India. This is not said by me or someone else. This is said by Goldman Sachs and JP Morgan. They see India as the coming 2 decades. This belongs to us. So much focus is on India because of one reason, that we have been a peace lover. We have been always a neutral country. Be it, we never supported Russia, we never supported Ukraine. So the only prime minister who can visit to 2 countries, right? I'm not a BJP spokesman, but I'm telling you, this is how India is basically as a country. We have been in neutral, right? So that's the reason India attracts a lot of investments and will keep attracting. And Indians are investing heavily in India. That's the reason markets will continue to go up. Take advantage of India is what I would love to say. Riaz, be it real estate, be it gold, be it be it financial asset class, be it commodities. I think so. It belongs to India. This century belongs to India. Let's be bullish on India is what I would love to say. The opportunities are phenomenal. Thanks, Riaz, for again calling me. And yes, looking forward. See, one more last thing I would love to say is, we are offering exclusively a complimentary, comprehensive financial planning session for Rainman, Kannada Sangha. So take advantage of this. This costs 25,000 in the open market with a registered investment advisor. What we are offering is a complimentary, comprehensive financial planning. So whoever comes forward, we'll offer this, and then you will understand where you are currently poised, and probably you can take it forward. So that's my last words, Riaz. Thank you so much.
Thank you very much. Thank you for giving this offer to our members. And then, welcome everyone for this session. And we will also come up with additional new session next year, or maybe in December, if we have some key topics to be covered on this investment topics from Sunil and his team. We will be reaching out to you shortly. If not, wish you the best, and then we will catch up in our next session. Thank you all. See you.
Hi
Bye-bye.
everyone, just
Radha.
just to inform, we have shared the Luxembourg EDM invite on the chat. So we are there, as Isha mentioned, between 26th November to 3rd December. So please feel free to get in touch if you want to have any discussions. Thank you.
Thank you, Radhika. Yes, we have it. Please download this idiom from the chat. Yeah. Thank you all.
Thanks,
Thank
everyone.
you all.
Thank you so
Thank you
much.
so much. Thank you for your
Thank
time.
you.
Thank you.
Thank you.
Bye-bye.
Riaz, could you please stop the recording
Yeah.
and take the host back? I don't know.